Joining us right now, Probal Sen as well as Sushil Choksey on the show. Gentlemen, morning. Good to have you on the show. Probal, hi, morning. Firstly, let me come to you. At 12:57 share, Probal, how do you see the pricing of the rights issue and particularly the flexible payment options?
I think, frankly, obviously, as any investor would, one would have loved to see a higher discount. Who wouldn't when it comes to, looking at Reliance, given where the price is? But one thing one has to really remember is that this is a rights issue. It's anyways being marketed to people who have already bought into the stock. And a lot of buying has actually happened in the 13 to 1400 kind of range at the end of the day. So for them, even at 1257, when they were expecting returns to, sort of aggregate even at a higher, 1350 or 1400 level, to have the ability to get in at around 1250 is not something that will be unwelcome. And of course, the flexibility in payment makes it even easier because, obviously your fund requirement for almost 75% starts hitting in only by, next year. So you can basically pay about one fourth of, your due amount. Sorry. And, still sort of invest in what is definitely one of the best performing, companies and businesses, particularly in that market cap range. So, yeah, I mean, expectation was that the discount would be more to entice people, but given the kind of commitment that the promoter themselves have shown to sort of backfilling it even if there is a shortfall, I think that shows a very strong commitment to the fact that the confidence in value unlocking even from these price levels is very, very high. And I think that is something that should provide a lot of comfort even though the discount is a bit lower than what was expected.
Sure, and I don't think given the current market environment and again, given how the fundamentals are backing Reliance, there's a whole lot enticing to be done any which way. But Sushil, the most interesting part of the rights issue is that it coincides with a great timing when just about any and every marquee investor is chipping into Jio right now. How is it that you see Jio's value in the sum of part valuations?
Good morning. Thanks for having me on the show. I think post the investment which the three private equity and Facebook has done, roughly 800 rupees a share is sum of parts which you would calculate, and potential for this to move up based on how India shapes up in next quarter where work to home is concerned and the amount of telecom and broadband requirements are concerned, the valuation based on ARPU and many other fundamental changes, because a lot of education, software companies, various facilities which Jio may enable where work to home is concerned, and the ARPU from the current number may have a spike of 10 to 20% for coming quarters.
Probal, we had Bharti Airtel, which had indicated that ARPUs are seeing an upward bias, and this bodes well for Jio as well, doesn't it? Don't you think that as of now the environment is rather supportive for some of these telecom players, and hence it makes sense to go ahead for that rights issue? How are you looking at that comparison?
Yes, and I think one thing that is interesting is that people have been speaking about the gap that has opened up in terms of ARPU between Airtel and Jio. But you have to remember that the business models and the kind of subscription mix that Jio has is very different. And our sense is that a lot of people actually bought into the promotional plans that they had put in place before the tariff increase actually happened. So that those plans will likely expire over the next couple of quarters. So the full impact of just the tariff increase that has already happened, I think, will reflect in Jio's ARPUs perhaps over H2 of FY21, where we expect that even for them, the average ARPUs would start to approach 150, 155 levels. So what Airtel has said in its commentary that it actually expects ARPUs to continue to tend upwards and reach even 200 rupee levels. I'm not too sure in terms of what they're basing it on. Is it based on the tolerance of subscribers for higher prices, where they think industry wide there would be further rationalizations upwards? But the fact is that, yeah, I mean, at least for Jio, given where ARPUs are right now, as the other gentleman just mentioned, I think I agree with him that there's a very clear 20% delta that is still to be seen just in the ARPUs alone over the next 6 months. But more important than that, I think Jio Platforms business, the kind of transactions that they have done, very clearly the aspiration is to move to becoming a digital platform and a digital content company rather than continue to be viewed via the prism of just a comparison with Bharti. I mean, whether they'll be successful or not is something remains to be seen. But I think very clearly that's the aspiration to move towards over the next 2 years. So people who are investing in this rights issue and are expecting further returns from Jio are in a way basically, ascribing confidence in that business model and that business ambition. And I think that's something that's going to be interesting to see if they can transition to that business model over the next, I don't know, 18 to 24 months perhaps.
Yes, indeed, the intent on that front has been quite clear. But Sushil, one can't really deny that when it comes to the traditional business, the refining and the petchem business, that has remained under pressure, and that may remain so as well in the medium term. Do you think that that could potentially cast a drag on the overall valuations for Reliance Industries?
Question. Let's take it from the last quarter. They did an inventory write down because of the crude price downward journey. The current quarter, the crude is already upswing, so we don't know how that is getting accounted in the current quarter. Second thing, most of the markets where they export crude value-added products, specifically the refined products, the diesel and the petrol and B6 fuels and things like that, have resumed. So April might have been a little challenging month, but depends on what mix of crude they bought and what they are selling. They may be able to gain back their margins over a period of next 2 quarters. Current quarter, the entire petrochemical value chain and the refining will have pressure, and it will be visible.
Okay, fair enough. Probal, let's understand what your outlook is in terms of how you could compare Reliance Industries. You spoke of the thrust towards moving towards a more digital play, Jio being the focal point. At $120 billion valuation, the most valued company, it's changing complexion. Do you think that it's now moving towards the league of some of the other global tech majors as well? Could we even put it in the basket or say that it's moving now towards some of those FANG names?
No, as I said, the point is that that's the ambition. Very clearly, if you look at the EV EBITDA or the price to earning multiples that some of the largest digital platform companies get, let's say whether it's a Facebook or a Tencent or an Alibaba and so on, obviously Jio has a long way to go. But the fact is that Jio's business potential in businesses other than mobility, whether it's enterprise, whether in terms of monetization of the app ecosystem that it has done, whether it is in terms of the creating a content ecosystem which people are paying for, I think all of that right now is essentially an option value. And one can obviously say that the kind of investor, the profiles of the investors that have come in indicates that there is confidence that Reliance can make it work. But can it move to the 15 times EV EBITDA kind of multiples that, let's say, the real global biggies actually get? I think both in terms of size and the timelines, it's probably a little way to go ahead. I would not put them in the same league right now, but I think that is the aspiration and that is the direction that the management is very clearly wanting to take the company. But as of now, I would say that that's probably a little distance away, based on at least the numbers that are reported and the kind of business mix that they have today and what is likely over the next year at least.
Right. Thanks so much, Sushil, as well as Probal, for joining in. 1440, that's where RIL is currently at.